Welcome to Markets Now. I'm Michelle Rook with Scott Varilek, Kooima Kooima Varilek. Mixed trading both grain and livestock futures this morning. We have corn and soybeans to the plus side, wheat lower, and then over in the livestock futures, hogs struggling just a little bit, but cattle a nice opening here, Scott. And talk about kind of what's pushing that. It seems like maybe a little bit of cash optimism, but there's also a little bit of a delivery story this morning.
Yeah, thanks for having me, and let's definitely start talking about cattle. It's having a real nice day. We're extending this rally and has a lot of good things going for it. So, shot open on the higher, triple digits higher on the open. So some of that reason there were 16 deliveries on the February cattle board. That was yesterday was the first day, or not the first day, second day, I guess, of whether we're going to see deliveries or not. We saw 16 in the south, and they were all demanded. So, and it looks like they were taken by strong hands. So somebody wanted the cattle, said, "Hey, bring them to me. Let's go." So that's always a great sign for the market to kind of fall back on and see, because we're rumoring that cash is going to be higher, and not hearing a lot of action and thinking that the Packers are close to the knife. So this just kind of confirms a little bit of, we're probably going to see some higher cash this week, where producers are willing to stand up and say, "Hey, I think I'm going to start some pretty hefty asking prices." Earlier in the week, I had heard, asking prices were going to be 185, and they were just kind of standing there, which I was very impressed. But that is looking like that's coming true. They're standing firm, saying, "Well, want some higher prices, tighter numbers." So I think that's a lot of the story that's happening in the cattle. It's just that we're kind of seeing some of this higher cash probably going to happen, and those demanded deliveries is an excellent way to start the market.
Yeah, and it seems like when we get these profit-taking setbacks, or whatever you want to call them, they're easily bought here, and today's a good example of that. But we had higher boxes coming in, and then do you think the weather forecast is maybe contributing to this a little bit?
Yeah, that's a little added factor here this morning, that there really wasn't any weather priced into any of these markets, but now we're seeing a forecast that might throw 4 inches of snow down south and Texas and the Panhandle. So right into some big cattle feeding country. So that's kind of a new adjustment that we can make. Just kind of adds to the fire here that we have happening. So seeing some more weather this winter has been a little bit tougher to kind of feed cattle in. So I think it's put a lot of oomph in this market here, especially with the cold that we had in January, and now sloppy, wet conditions that we have now in February, which is a little goofy, and now seeing some more of those systems happen. We got to put some of that premium in real quick, and then put that on with the February deliveries, and that's really helping out.
Yeah. What are packer margins doing like right now? Certainly there's a lot of talk about that.
Yeah, hearing the Packers getting cut into their margins and worried about it. There's already been jokes around that producers, to backstory this a little bit. Producers have had a long run of rough profits. It's been years of struggling and trying to get, and that's why we've finally got our all-time highs in 2023, and we're having a good start to 2024. Went through COVID, trying to stay afloat, and had to find a bailout from the government. All of that happened while the Packers had some record margins. So you got a producer with that attitude, their eyes are glaring, and they're pretty frustrated with that. So when we do hear of some negative Packer margins, some decreased profits for the Packer. The joke this morning was they want to start a GoFundMe page for the Packers, and I don't see anybody signing up for that. But that's kind of the attitude that the producer has. They're wanting their time, and I think that says, okay, so is this beef too high? We're starting to see reports of this. Fox News ran a report saying the tight cattle numbers, and you're starting to see that on a national level, and the demand warriors are saying maybe this beef's too high. But when you do look at some of these cuts, they're actually priced lower than some year ago levels. So there was some massive retail profits and Packer profits that were just chewing into that. This cow herd, the cattle producers, they've viewed this as I'm going to make some money on this opportunity. We're all still of that attitude. We're just waiting for that rug to be jerked. Just, okay, when are they going to jerk the rug? When is this over? So I don't see the long term. This thing's going to stay higher for a long time. We've got some sustainability back. I don't feel that. So I don't see a cow calf producer looking to go buy a bunch of heifers with high interest rates and get started and trying to find enough help to calve out a bunch of cows. So I think that's also a big part of this continued extension and why the feeders are leading so well here.
And we have cash trade on the feeders out in the country pretty much on fire, don't we?
Yeah, cash trade on feeders has been red hot, and just a continuous climb and tighter numbers as kind of we expected. We had that big run on fall feeders, and everybody was placing cattle early, and now it feels like we're starting to run into where are they? We're getting into that really tight spot, and as we start to look at the next cattle on feed report, as soon as we turned the page on the last one, we all couldn't wait to get to this one, because I think these placement numbers are starting to get penciled in and hearing some pretty friendly numbers. Are they 16% back from a year ago? So a lot of these estimates I'm hearing, we'll get the officials on Monday, or that we're going to be like 85% ish in that range for placements. So that once those numbers started to happen, those feeders kind of kicked it into high gear, and they haven't looked back yet. And like you said earlier, every time they have one down day, that's really the only correction it's got. I mean, I've been saying this market's been overbought for quite some time now, but it has one day break, and it's finding buyers. It's finding people that want to rally this market up.
Yeah, and the funds aren't very long here, so they could certainly add to that lane. Okay, the hog market, conversely, has been down like 5 out of the last 6 days. We had some export news out this morning that was friendly on the weekly report. You had China in there buying, but yet the market falling back. Are we just in profit-taking mode?
I'm going to say it feels like a little bit of profit taking to me. You can have range bound markets where they're just in a nice little range, and then you have a range bound hog market that's about like this. It's heading to the bottom of the range and the top of the range in fast order. And when those hogs trend, they trend hard and fast, and that's kind of what they're doing. And it's not a long trend that they do, but when they decide, okay, we're going to break a little bit, they just do it. And we're probably $2 away from some of the halfway retracement levels after this last rally. So I would look for that for possibly some support in the hogs. But export news today, you get the report today, and China's at the top of the list, buying a pretty good number. And that's what that market needs. We've been so supply bearish for so long. And anytime you throw China into the news there, that's a friendly word that the markets love to trade. So I think that's going to be part of what we're going to look forward to and say, okay, is this going to be continued? Because I think that's a pretty good sign that, hey, we have somewhere to go with this pork. Maybe we can start to firm some of these markets up.
Absolutely. We did have a over $2 drop in the cutout values. It's not been a good week there for that either. So that might be lending a little bit of bearishness. Grain market, soybeans to the plus side this morning. Corn is trying to follow. We did have the Conab numbers out on Brazil this morning. Are we trading that, or is this just some typical, positioning ahead of the WASDE at 11?
I'm gonna say this is probably some positioning more than anything on some of these grains. And the February WASDE report's usually pretty boring, and after we get past the January report, we kind of fall into a sleep mode until we get to acreage in the end of March. So I'm just thinking continued sideways, not a lot of movement till then, until we get some brand new news on what we're doing here on our acreage. So not looking for much fireworks here on the grains today, but could be some short covering. We've had a pretty significant break, and you talked about the Conab numbers. That could be part of it, but still think we're in a little bit of a range bound sideways market here that I don't see a lot of interest in. But the thing of noting is, I think many of the farmers have finally maybe realized, it seems like every day one more producer realizes, this market's probably in rough shape, and there's been a lot of this market could go lower. And I think we're seeing that grain shift from farmers' hands happening pretty fast over the last couple of weeks. So lots of producers saying, okay, I've got I just got rid of it all. I got rid of it all. But then, the ones that don't mention it, they're a little bit embarrassed to tell you, well, I still got, this amount of bushels yet, so that they kind of have that feel. So seeing a shift out of the farmer's hand, I think that'll maybe help these markets as we see some of that grain moved rather than seeing them sitting on it and as it continues to drive lower.
Well, and we're at levels here, especially on corn, when you're at contract lows, where we should be seeing strong export demand. We had a flash sale this morning, and you would think that this is a value level, right?
Yeah, that's what this market needs. It's at a level that you're okay with buying. The downside doesn't look near as big as what it was when we were at 6 or 7 or 5. Now it's like, okay, if I stick my neck out there and buy a lot of this grain, I don't know if my downside's all that big. So yes, your value buying could be happening, seeing a flash sale. That's what this market's going to need, because we've got a lot of grain. It's time to start seeing where we can start chewing through it. So if I'm an end user and I want to look at covering some grains here, I'm okay with it, because I don't feel like there's this big downside. I also don't feel like big upside either, but you're okay with that at this level.
All right. Thanks for joining us as always, Scott Varilek with Kooima Kooima Varilek. That's Markets Now.